Welcome back to Home Hero HQ Studio. So we have a lot to cover today. First things first, the studio. A little revamp, you know, gotta change up the vibe, which is exciting because not only am I gonna be producing more out of here, I also want to give you an opportunity to come out here as well. Share a podcast, share a story, share an educational piece on whatever you specialize in. Located here in Tacoma, Washington. So if you are interested in renting out this space, having me direct, edit, and produce your episode or your story, let me know. Let me know. Shoot me a message. This is going to be more of a long form space of content. So this is going to be on my YouTube, maybe a little intro or a little short form for Instagram, which leads me exactly into my next point, which is Instagram. I've decided to consolidate everything that I do into one account. So I have a real estate page because I'm a real estate agent here in Washington State. I also train others in media. I do a ton of media outside of real estate as well as real estate. And I also love to travel with my family. I'm also, what else do I do? Goodness, I have so many different pages. And so I've consolidated everything into one to make it easy for you to follow me, to see what I'm all about. And that's under the main account, which is revamped, renamed, remarketed under one name, which is Yarrow Spring Glory. Why Spring Glory? What does Spring Glory have to do with anything, I guess? The name Yaroslav, which is my full name, is the core meaning of that is Spring Glory. And I like to spring glory into everything that I produce, create, and do. So this is going to be one place where I share everything that I do. This episode here will be more of a real estate update. But in short, the Instagram, I will only have one now, which you probably are already following if you're seeing this video. But if you're not, make sure you go into a link there on my YouTube channel and follow my Instagram. That being said, we have a lot to talk about, okay? A lot about the economy, real estate, and so I have my laptop here because I want to share a few things. The most unexciting part is rates. They're kind of sideways. We're in the mid sixes, give or take 6.3, 6.6. Last week it was 6.66. Yeah, but right now we're flying around 6.5. Now, that being said, there is another Fed meeting. The FOMC meeting is scheduled May 2nd through 3rd, and today's May 1st. By the time you see this video, it might already have happened, and I will update another short recap video after that happens. But for today, we don't know what's going to happen. We don't know if rates are going to go up, rates are going to go down. There's speculation on both sides. May 2023 Fed preview. FOMC final rate hike. We don't know. This is on Forbes Advisor, Forbes.com. We don't know. I mean, what do we even know? From the last 2 years, what can we even predict what's coming next? We can have a few ideas based on the economy, what the Fed is doing, the war. A lot of different things can kind of give us an idea of where it's headed. But then again, they at any given point, they just put the brake on and decide to put more money into it or not increase rates. It's ridiculous. No one is predicting, and no predictions for that matter, are even close to being correct. And if they are, that was the one time they were correct, and the next time they're not correct. It's a crazy world we're living in. Here's what it says. It says, the meet on May 2nd to 3rd. Let's see what they're saying. They're saying the S&P 500 is up around 8% year to date, thanks to the optimism of the Fed. What optimism? I don't know if you're optimistic. We'll talk about the real estate here in a second. Collapse of Silicon Valley Bank in March. That was a huge deal. You've probably heard about it. A few banks crashed. That made people worry if the larger bank system was to collapse. And again, the people on top said, we will decide who we bail out and who we don't. And they bailed out these big banks. which pretty much means a lot of people aren't getting screwed because they're getting their money back by the Fed. But at the same time, it just means, hey, slap on the wrist, you're good to go. Kind of if you remember what happened to like GM Motors back when they were supposed to get bankrupt, but then the government bailed them out with the money that we don't really have that's printed. You already know. And again, we're going to talk about another bank crash here in a second, but the question is, could this be the Fed's final rate hike? That question is so irrelevant because yes and no. Maybe, maybe not. We don't know. They're saying percentage-wise, 25 basis point increase is possible for the market parlance. Another 25 basis point hike would bring the federal funds target rate to a range between 5 and 5.25. Traders are just 14% chance that FOMC would choose not to raise rates in May. So they're saying the majority of speculation is that the rates are going to go up by another quarter. Not like that really matters when they decide to, release another positive jobs report, whatever that means. I don't know about you, but the small business owners like myself are not seeing business growth. We're seeing stagnation. We're seeing either here and there business, or one week is great, other week is complete nothing. It's so unpredictable. But most small business owners are still struggling, and whenever they release a report, it can counter whatever they've already done previously, if that makes sense. So this rate hike could do nothing in short. It could increase it, and then 2 weeks later it can go back down if they decide to release certain data. They're saying the U.S. economy holding steady. I don't know about you. Okay, we're going to talk about buying and selling real estate here in a second, but I don't know about you, but the economy is not stable. It's not steady. Holding steady? No, the economy is on the brink of collapse. Most of our money is in Ukraine. That's a whole different topic. We're not going to get into politics. All I'm saying is America needs to think about America. Inflation finally takes a chill pill. Inflation is not taking a chill pill. Guys, look at the economy. Look at your everyday goods, the cost of everything. Inflation is not taking a chill pill. So I don't care what Forbes.com is saying. We should be trusting the source, just like we should have trusted the science. Anyways, maybe a little pessimistic here on my first part of the video, but I just want you guys to really think about this. This meeting can go either way, and it really doesn't matter, because 0.25 either direction won't matter. You're still paying $3,000 to $4,000 on an average house. Now, if you can afford that, great. And some people can't afford that easily when they sell a house, buy a house. But for the majority of people, and I help a lot of these kind of people, first-time home buyers or service members who are trying to make sure their payments are low, it's a tough price point. We're in the $450 range, and that's everybody's game. I have 3 in escrow right now, and we're going to talk about those transactions here in a second. But those folks are having a hard time on getting under contract because that's everybody's price point, and any way you slice it, it's a $3,000 payment after taxes. That's not even talking about utilities yet. So no, the economy has not taken a chill pill quite yet. Let's see. So I want to talk about headlines. A couple headlines that are, worthy of mention. First Republican Bank. If you were looking at the news last week, you already know that there was another bank crash. And guess what? It got bailed out too by a bunch of other banks. Long story short, the FDIC takes over the bank, and now a couple hours ago, actually, we get word that Chase is taking over that bank. So I want to talk about that headline here. First Republican Bank. It says, First Republican collapse sparks regional bank share sell-off. No bueno. That's the short end of the stick. So regional bank share crisis fallout. They're going down. Okay. A deal was announced earlier on Monday that allows for an orderly failure of First Republic. Under the terms, Chase Bank, JP Morgan Chase, will pay $10.6 billion to U.S. Federal Deposit Insurance Corp, FDIC, which your money is protected by in the banks, up to whatever, $250,000 or $500,000 if you are joint with your spouse on there, which took FRC into receivership for most of the failed bank's assets. Shares of Chase rose 2.14%, making it the largest U.S. bank, the top gainer on the Dow Jones. And what this will do, who knows? This deal does not change the rates, recession, and regularly headwinds that regional banks are facing. So pretty much says this will have no effect on anything. But what bank is really next? I mean, honestly, with this being the third or fourth bank at this time, who's to say that your bank is not the next one? Who says Wells Fargo is not the one? I'm not trying to scare people, but at the same time, you can't keep your cash in cash and you still need funds in your account. At the same time, you should be diversifying. It's complicated, guys. So don't tell me that this economy is taking a chill pill. But you should be looking at the headlines, not because they scare you or because they calm you, but because there's movement in the market, in the economy. And that tells you on what's really going on. Follow the money. Every single time, follow the money.
That the banking system is safe. Your deposits will be there when you need them. Every American should feel confident that their deposits will be there if and when they need them.
The White House is confronting two crises that could have major consequences for the economy. The Treasury Secretary now warning the U.S. could run out of money to pay its bills in a matter of weeks if the debt limit isn't raised or suspended.
Wars follow the money. Politics follow the money. It always goes back to just that. So keep watching the bank crisis. Are more banks going to fail? Maybe, maybe not. But that's a worthy mention. And keep an eye on Chase. Seems like they got their the good end of the deal. Okay, the next one's good. You probably heard about this one last week. Maybe it's old news for you. For some of you, it's new news. I've talked to lenders about this topic. I've talked to other agents about this topic. I researched this topic, and the big thing is credit score and what you got to pay for your home in regards to your credit score. Now, there's a huge misconception of what this really means. So I want to clear that up for you and tell you what this really means. And in short, it means communism. I mean, jokes aside, I mean, pretty much it's going to cost you more to borrow money if you have a good credit score and less than it used to if you have a bad credit score. This does not mean that you go out there and ruin your credit score to get a better deal, because you won't. The reality is a better credit score will still get you a better rate, which will end up saving you a lot more money long term. Please don't keep your mortgage for 30 years. Pay that thing off as soon as you can. Make extra payments if your budget allows you to. Do not keep a house for 30 years. You're going to double, triple the price you're going to pay for the house. Maybe take one less vacation, but make that extra payment. I'm telling you, that's going to do you good. So the headline that I want to read on this one is, okay, Biden raises costs for home buyers with good credit to help risky borrowers. That's why I said communism. In communism, everyone's equal. Why would you work harder if the one that works less hard gets the same treatment as you? You know what I'm saying? That would discourage the hard workers to work hard. As much as I want to get into politics, I won't, but just follow the politics on that one. It says, homebuyers with good credit scores will soon be facing higher mortgage fees as the Biden administration seeks to close the racial home ownership gap. Racial home ownership gap. Maybe fix the crime. And get more first-time low-income buyers through the door. You know what that tells me? It tells me, hey, we're going to make it easier for you to get a loan. Now, don't tell me that this is not a 2008 happening all over again. Does that not sound familiar? Let's make it easier for you to borrow, to make it easier for you to fail, to make it easier for us to crash the market. I don't know. Is a crash coming? I don't know. Leave it in the comments. Maybe tell me what you think. Is the economy crashing? Is the economy doing great? And like the other headline said, we're coasting now. Anyways, good credit people. Good job for you. You played the game right. That means Uncle Sam wants you. So us good credit people who have been watching our credit, who have been building our credit over the last years, have been making our payments on time, it's time to make sure you're making, compensating the other people who have not. So on average, the cost to borrow on a 30-year home mortgage is going to cost you about $60 more a month. while risky borrowers will get more favorable terms because their fees will be reduced. That makes sense. Hey, Joe Schmo, who doesn't care about their credit, let me help you. Let me help you get a home because you can't qualify. We need you to buy a home because it's going to be easier for us to take it back when we change the system and crash the market. Anyways, you already know where this is going. This is no bueno long term. I don't know what it's going to do in 6 months to 12 months, but this is not a good thing. This is not a good move by the Fed. Only about 25% of home buyers with Federal Housing Administration loans are people of color, according to the White House. Black and Hispanic people on average have fewer savings to use as a down payment on a home and tend to lower credit scores, according to David Stevens, CEO of Mortgage Bankers Association, MBA. FHA commissioner during the Obama administration. You connecting the dots, follow the money? Okay. Like I said, this is not about racial. This is not about helping people. This is about screwing the system. And it's another punch to the American people. Instead of helping people build their credit score and putting that money where that should be happening, making perhaps making it free for people to build their credit. Nope. Make the other people pay for the less fortunate in a way. Kind of like we're paying for Ukraine. Anyways, you like my little segue there? Okay, we won't talk about more on that. Anyways, long story short, I guess final thought. In hindsight, if you have better credit, you're still getting a better deal than the person who has less credit. But you do have to look at this on the other side and say, hold up, what's really going on? If someone has worse credit, why are they getting a cut? What's the real agenda? So just keep your eyes open on the moving, news on all of that. The last headline I want to talk about, and you've probably heard about this. If you haven't, you will now. And that is a long-awaited Fed digital payment system to launch in July of this year. FedNow is what it's called. You can research FedNow. There's a lot of other more educated people talking about this online, so make sure you're doing your research. But what I want to say is the digital dollar FedNow system is coming. Whether you like it or you don't, or you're a conspiracy theorist that's actually based on facts, or you just, I don't know. Well, regardless of what area you're in, digital currency will have a direct impact on all businesses all across the board. First off, digital means control. It means you won't have to ever do taxes again. Why? Because, they already know how much you make and how much you don't make. And it's not like I'm trying to hide income or something. I do my taxes. I have my tax consultant do all my paperwork, all my accounting up. I give them the documents. I write things off when I need to and when I can. I use a system that's there in place for business. But at the same time, if you think about the dollar and how it's changing, it is frightening. It is concerning. Not only is the digital system in place already and will be full throttle by the end of the year, I assume, there's also this, I don't want to use the word fearful. There's also a concern with how much power the dollar really has, especially with the BRICS system, especially with, all these other countries getting together and going away from the dollar. And the dollar, the digital reserve, there's a lot of things going on around the dollar. The economy seems to still be moving. Which direction, we don't really know. There's a lot of stuff going behind the scenes. But what I want to say is that with digital currency comes full control. And with full control comes communism? I don't know. I guess we'll have to play the system to see. But that would mean that no banks could really crash because nobody's really pouring money out of their banks, right? Like I said, more control and more oversight over all areas of the financial sector is no bueno for business people. And long term, digital would be fully controlled in what you can or cannot do, say, or even post. So I see the digital currency as an attack. I see it as a control thing, while, they're trying to say this will make it easy for transactions to happen with the Fed now. It's verified instantly. It's faster than Venmo. So all these other transaction companies would probably either have to coincide with the system or go out of business. I don't know. But it'd be pretty much a way to have funds immediately credited to accounts immediately rather than the days it took to reach most people. I don't know about you, but I would rather take 2 to 3 days to get my payment than have it fully controlled by an digital system that's fully controllable. Overnight, your funds could go from actually $1 is now this. So I don't know if you guys are out there collecting silver or gold or whatnot, but maybe perhaps it's a good time to diversify a little bit. I told you guys I'm going to talk about real estate, so my last nugget here is going to be regarding real estate. So I told you I got a couple of transactions in escrow. They've been difficult to get them under contract because we're in that 450 range or under. I finally got one of my clients under contract at 430, and we were able to get that house, have them pay closing costs, and after inspection, we were able to get another $1,000. So they're in a really good spot. That appraisal came back on that house, and guess what? It came back over value, which means we were paying $1 or $2,000 less than the market value for the house, which is already a win in this market. Doesn't happen very often, but it did for one of my clients, which is awesome. And my other transactions from out of state, they're closing mid-month or end of the month, mid-month, but there's a rent back. And I'm super excited for them as well. And these folks, they had to move. They had to make a change. Now, if you're in that boat, we can still get you a good deal. We can still negotiate on your behalf. I can still help you in so many different ways. There's a lot of things off market still as an opportunity. There's things on market with opportunity, especially when it's when there's crazy stuff going on and everyone's waiting. If you got to move, still get you a good house for a good price. You don't have to overpay. You don't have to stretch your budget to just for home ownership. And there's a ton of programs out there right now. And you can still have sellers pay down your rate, and you can still have sellers pay your closing costs. And it's a great time to buy if you have to buy. But if you are a first-time home buyer and you don't have much reserves saved up and you're stretching it thin and your mortgage is most of your income and the lender is telling you that's okay, beware, okay? Beware, because you do not want to be calling me 2 years later on a foreclosure, okay? We just had a listing that I had as a foreclosure. We couldn't sell it. He just owed way too much. And the gap between what he could sell it for and how much he owed wasn't there. So bank is taking that house, unfortunately, from them, and it's painful. I've dealt with foreclosing transactions, so give me a call if you are in that need. Call me early. If you're having a hard time with your payments, it's better to call early than to wait till the last month when you're not going to get out of the situation. So if you're having a hard time with payments, give me a call. Let me get you some resources. And if you got to sell now versus later. That's my advice. I'm not a financial planner, advisor, or anything legal that is telling you to do what you should do. Just giving you some pointers of what I would do. Still a great time to buy. Inventory is a little low right now, so it means if you list your property and we market it the way I do media with my listings, you have a great opportunity to still make great money and move on and make different changes, especially if you're moving out of state, if you're just trying to do something way different or upgrade your house, and that's still an opportunity there. So I'm not saying don't buy, don't sell. It depends on your situation. Give me a call. If you want to talk about what the market is doing day by day, I'll keep you posted. These updates I do, I'm trying to do them every week, but again, it just depends on the schedule and what's going on. So I'll be doing more producing out of here now that this is all set up. And May 2nd and 3rd is the FOMC meeting, so I will give you another update on what they decide and what I think it means. Until then, thanks for tuning in. Don't forget to subscribe and follow me on my Instagram. Thanks, guys.